Median household incomes all across the district kind of hit that almost 45,000 or above 45,000 threshold. If the plan passes as is right now, that would cut their taxes almost in half. Am I right?
Well, the first 55,000 under the House plan is totally, completely tax-free if you're the average typical family of four, meaning a mom, dad, and two kids. And the reason why that first 55,000 is tax-free is because that standard deduction is doubled from 12,000 to 24,000 for a couple, married couple. And then you have an increase in the child tax credit from $1,000 in current law today to $1,600, plus an additional $300 credit, what they call a family credit. And so when you add all that up, you're basically your first $55,000 for any household, family of four, is going to be tax-free.
Let me ask you, when seeing this come through, and I mean, it's not just talking about the households. Of course, for folks here on the local level, the folks, the constituents, that's the biggest push. I guess you've been sending to them is that the individual, on an individual scale, what HR 1 wants to do is reduce taxes for you guys, especially right now in terms of getting homes, getting those incomes, getting those families started.
Well, the primary goal of this is to grow the economy. We want a very strong pro-growth package so that we can grow the economy at a 4.5–5% clip on an annual basis, which this country is very, very capable of doing if we have the right tax policy in place. The way we do that is we take, for example, all the pass-throughs, the S-corps, the LLCs. Many of those pass-throughs are basically entities that pay at the very highest marginal income tax rate. That's why it's referred to as a pass-through, is all their business income is basically taxed on their personal income tax. And typically it's at the very highest rate because a lot of small businesses are making above the threshold that triggers the very high marginal rate. Well, we take all that net business income and say that that cannot be taxed any greater than 25%. That's a huge tax break for small businesses, which is the majority of your LLCs, S-corps, partnerships, etc. On the corporate income tax side, we take the corporate rate from 35% down to 20%, and we do that so that we can be competitive once again internationally. The average industrialized nation has a corporate income tax rate of 22.5%. That's far below the 35% rate that we have in this country. Capital and investment goes where it's welcome, not where it's unwelcome, and we want to make this country the most and the best place to do business in the world. And so that's the whole motivation behind restructuring the business taxes the way that we are. The other thing that I think is critically important to this package, and an item that I'm very excited about, is that first but the first 5 years, year 1 through 5, you get 100% write-off on any new expense for your business, whether that's new capital investment, for equipment, anything of that nature that's going to grow your business. Or if you're a developer, the water and sewer systems that you're putting in place, all that is 100% write-off in year 1, year 2, year 3, year 4, and year 5. And so it's not just a one-time deal, it's over a 5-year period. And so, for example, if you're a farmer and you go and buy a new tractor, that's 100% write-off in year 1. You buy a second tractor in year 2, same thing. Same thing for year 3, year 4, and year 5. And so that is a very, very key pro-growth element in the package that we're really excited about. And what's going to happen is you're going to have a lot of extra dollars churning in the economy. And even the U.S. Chamber of Commerce has stated that they believe that we'll generate an extra $1 trillion to the U.S. Treasury because of all those extra dollars that are churning.